Okay, so you've got a little bit of money lying around and you're thinking to yourself, is it better to invest it all at once, do a lump sum of investing all at once, or is it better to just invest it over time? What's up, you guys? Welcome back to the Average Joe Investor channel, and in this video we are diving deep into a significant question a lot of investors have, which is it better to lump sum invest a large amount of money right away out of the gate, or is it better to average out the risk and maybe average out some of the emotions that are involved by investing over time? And depending on what answer you want to find on the internet, you can find the answer that lump sum investing is better, and you can find the answer that dollar cost averaging is better. But I try as much as possible to back up what I talk about on this channel with facts and data in real life. So in this video, we're going to talk about exactly what's going on here with this question, and then I'm going to show you with the actual data with an Excel spreadsheet, which is, how I roll, what would happen if you had invested a certain amount of money as a lump sum or invested over 12 months to see just how much money you would end up with after 5 years. And we're not just going to test one time period. No, we're going to test 5 separate 5-year time periods. You guys know how much I love to talk about investing, so without further delay, hit that like button, hit the subscribe button, let's get started. Hey guys, Joe here. If you are new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. Make sure to leave a comment below saying you subscribed, and I promise to personally respond to your comment. All right guys, let's go ahead and dive right into the topic here. When I talk about whether we should lump sum invest or dollar cost average, what I'm not talking about is trying to time the market. I'm not trying to say, well, let's just hoard our money and wait until the perfect time to invest, because odds are you're not going to be able to time it very well. And just so we can test this here, I want to give you a quick example of just how hard it is to time the market. Let me just pull up my program here, Paint, and let me just show you here. Let's say that this is the market and it's been going up and up and up and up and up, and you're thinking, I'm going to wait until it hits the bottom and then I'm going to invest right at the bottom. So then, let's say COVID happens, right? And it starts to go down. You're thinking, sweet, I'm about to invest. And then, you think, I better invest now. So you invest now, and then all of a sudden, it comes down. And then oftentimes, by the time it's on its way up, you haven't invested yet. Because that's what timing the market is like. There's so many ups and downs along the way that generally when we talk about investing, we should not be trying to time the market. We should be investing over time, whether it's a weekly basis or a monthly basis. The situation I'm talking about in this video is, let's say you have a large amount of money, and whether it's, you won the lottery, or maybe you had an inheritance or something to where you've got maybe $5,000, $10,000 sitting aside, and you're thinking, should I invest this money all at once? Or should I invest it over a specific period of time, let's say over a few months or maybe 12 months, just to make sure that I avoid any large dips in the market? And if you look hard enough on the internet, you can find an answer either way, and they might even be able to back it up with some evidence. So I wanted to go ahead and test this myself. So I've got a test here that I want to show you with the investment, the S&P 500 through SPY, the ETF. And what I did is I took a look from 1995 all the way through 2021, and we looked at 5 separate intervals to see if we had taken a hypothetical $12,000 and invested it all at once in one fell swoop, or if we invested that $12,000 in $1,000 increments once a month for 12 months, where would we land with what actually would have happened during 5 separate time periods? Reinvesting dividends, of course. Let's go ahead and dive right into the data. I never want to waste your time. In this example, we're going to take a hypothetical $12,000, and we're going to go 2 different ways here. We're going to invest all $12,000 in one fell swoop on one day, and then we're going to look at investing it $1,000 at a time once a month for 12 months, reinvesting dividends. And we're gonna see which one comes out ahead between 5 different time periods: 1995 to 99, 2000 to 2004, 2005 to 2009, 2010 to 2014, 2015 to 2019, and then lastly, May of 17 through May of 2021. So here's the first example here. January 1st, 1995, we've got the monthly contributions, we've got the lump sum. We can see the difference between shares and the lump sum shares, dividend income, lump sum dividend income, and the total value here. First period here at the end of 1999, let's scroll down. If we had lump sum invested, we would have had $39,829. And if we'd done a monthly contribution once a month for 12 months, it would have been $34,000. So in this example here, lump sum investing was significantly better than doing a dollar cost averaging of a lump sum money. Let's take a look at the second example here. January 1st, 2000 all the way through 2004. So we had the dot-com bubble here. let's see how that affected things. December 2004, we would have $11,132 if we had done the lump sum investing, and $10,961 if we had dollar cost averaged. So even with a significant market dip that occurred, it didn't matter in this case. We still had more money by lump sum investing. All right, January 2005 through December 2009. Let's scroll down here to see what would have happened by the end of 2009. We would have had $12,400 if we had lump sum invested, and $12,151 if we had dollar cost averaged. January 1st, 2010 through December 2014, scroll down here, we can see that we would have ended up with $25,098 by lump sum investing and $23,979 by doing a dollar cost average for that first 12 months. Then we've got January 2015 through December of 2019. If we had lump sum invested here, we would have $21,137 versus $20,611 by dollar cost averaging. And then lastly here, we'll look at 2017 through 2021. If we'd done the lump sum investing, we would have had $21,949 versus $20,642. Guys, this is real numbers, real investments, real dividends being reinvested, actual price history, and every single time, all 5 scenarios, lump sum investing won the day. And the biggest reason why this works is, if we're investing in the stock market, we are investing long term, not investing for a year or two to see what's going to happen and then make a large gain. We are long-term investors. So even if the market did dip right out of the gate, you're still reinvesting dividends along the way, whether it's dividend stocks or an S&P 500 ETF, and you've got a long runway for your investments to grow. So I would encourage you, I'm not a financial advisor yet, again, that's coming, but the data for me supports the fact that for me in my situation here, I'm a long-term investor, I've got a lot of time for my investments to grow, I'm going to invest now. If I come into a lot of money that I know I'm going to invest, I'm just going to invest it right now. You can see a graphical interpretation of this here. We've got all the numbers here, the lump sum versus the monthly amounts, and you can see graphically that, like I said, every time period, lump sum investing won the day here. Hopefully you found this valuable, guys. Again, not every situation is quite the same, and your time frame for investing and what you're really trying to accomplish with your money does make a difference on whether you should lump sum invest or dollar cost average, or maybe even more important of a question, should you be investing in the markets at all given your situation. Just as a quick reminder for you guys, again, Average Joe Financial, my financial planning firm, is launching here in about 2 to 3 months, so really excited to get that going. And again, if you think it'd be a good fit for you, if you think that you might be interested in seeing if I can add value to your personal life here in a couple of months here, make sure to check out the link in the description below. It's not you committing to anything, just saying I'd like to learn more about that once we get started. Make sure to leave your 2 cents in the comments below. Let me know what you think about this analysis, what questions or concerns maybe it brought to the surface for you. What do you want to see more from me in future videos? And that's all I got for you guys. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.